Welcome. In this guide, we are breaking down the core differences between Canadian banks and credit unions. We will examine ownership structures, fee models, convenience, and deposit safety to help you determine which institution serves your financial goals best. Most people open a bank account and never question it again. But where you keep your money actually affects your fees, your service, your borrowing, and even how your money is used behind the scenes. And for a lot of Canadians, the difference between a bank and a credit union is bigger than they realize. Because even though they both hold your money, they are not built the same way. Banks are for-profit businesses. Credit unions are member-owned financial institutions. That sounds small, but it changes almost everything. Now, before people start fighting in the comments, this is not about saying one is perfect and one is terrible. Both have strengths. Both have weaknesses. The real question is, which one fits your life better? Let's start with banks. Most Canadians use banks because they're convenient. Big networks, more branches, more ATMs, more apps, more products. If you walk into a major Canadian bank, you can usually get everything in one place. Checking account, savings account, credit card, mortgage, investments, insurance, business banking. It's all connected. That convenience matters. Especially if you travel often, move provinces, run a business, or want advanced online banking tools. Big banks also tend to invest heavily into technology. Their apps are usually polished, their mobile features are strong, and customer support is often available longer hours. But convenience comes with trade-offs. Because banks exist to make profits for shareholders, that means fees matter, sales targets matter, growth matters. And sometimes customers feel more like account numbers than actual people. A lot of Canadians pay monthly account fees without even realizing how much they lose over time. $15 a month may not sound huge, but over 10 years, that's thousands of dollars gone just to hold your own money. Then there's overdraft fees, NSF fees, ATM fees, transfer fees, credit card interest. It adds up fast. Now let's talk about credit unions. Credit unions are structured differently. When you join a credit union, you become a member owner. That means the institution is supposed to operate for the benefit of its members instead of outside shareholders. And because of that, credit unions often focus more on community and customer service. Many people say they get treated more like a person and less like a number. Now, that doesn't mean every credit union is amazing, and it doesn't mean every bank is bad, but the culture is often different. Credit unions may offer lower fees, better savings rates, lower loan rates, or more flexibility with lending decisions, especially in smaller communities. Sometimes a local credit union will work with someone that a big bank instantly rejects. That matters for small business owners, self-employed workers, or people rebuilding credit. Some credit unions also return profits back to members through dividends or rebates. Again, not all, but some do. Now here's where people get nervous. Safety. People ask, is my money safe in a credit union? In Canada, yes, credit unions are regulated and insured, but the insurance system may differ depending on the province. For example, some provincial credit union deposit insurance systems cover more than the standard federal bank insurance limits. That surprises a lot of people. Many Canadians automatically assume banks are safer because they're bigger, but size alone does not automatically mean better protection. The important thing is understanding who insures your deposits and what coverage applies. Now let's talk about borrowing. Banks often have stricter systems and approval processes. Everything is heavily standardized. Credit score, debt ratios, income verification, automated systems. Credit unions sometimes have more flexibility because decisions can be made more locally. That does not mean easy approval, but sometimes there's more room for human judgment, especially if your financial situation is unusual. Now there's another thing most people ignore: customer experience. If you've ever sat on hold forever, been transferred 5 times, or felt pressured into products you didn't want, you already know this matters. Some people love big banks because everything is streamlined and fast. Other people hate feeling like a sales target. And this is where credit unions often build loyal members. Relationship-based service. Again, not every location, not every employee, but many people genuinely prefer the experience. Now let's be fair. Credit unions can also have downsides. Some have fewer branches, smaller ATM networks, less advanced apps, fewer investment tools, less international access. If you travel frequently or need complex financial products, a major bank may simply work better for your lifestyle. And depending on where you live, access matters. If your nearest branch is an hour away, that changes things. So what's the answer? Bank or credit union? Honestly, the best choice depends on how you use money. If you want convenience, advanced apps, large networks, and all-in-one financial products, a bank may fit you better. If you care more about lower fees, community focus, personalized service, and member ownership, a credit union may be the better choice. And here's something people forget. You don't actually have to pick only one. A lot of financially smart people use both. Maybe a bank for convenience, maybe a credit union for savings or loans. You can compare products instead of staying loyal to one institution forever, because loyalty means nothing if it quietly costs you money. At the end of the day, your financial institution should work for you, not the other way around. And most Canadians never stop to ask that question. They just stay where they opened their first account. But small financial decisions repeated for years become big financial outcomes later. So if you haven't reviewed your banking setup in years, this might be the week to finally look at it. To recap, banks offer unparalleled convenience and technology, while credit unions provide member-driven service and potentially lower costs. The best choice is the one that aligns with your specific needs. Take the time to review your current setup this week. Thanks for watching.